It's Wednesday, May 20th, 2020. So more hocus pocus on Wall Street. Dow Jones up nearly 400 points today. So it looks like the market is going to continue to drive back to all-time highs, or at least try to get back to all-time highs. Article today on CNBC. If you get a chance, check this out. It's titled, Weekly Mortgage Applications Point to a Remarkable Recovery in Home Buying. So we've got the stock market roaring back, more than likely going to roar back to all-time highs and maybe succeed that. And we've got mortgage apps up. So I guess everything is rebounding. Everything's going to be okay. Nothing to see here. Mortgage apps up 6% last week from previous week. But the question is, with half of the country now jobless, with the unemployment rate, we're hearing 30%. I think it's closer to 40%. We know for a fact that over 50 million people are unemployed now in America. And even before they were, take a look at their wages. Half of this country makes less than $32,000 a year. But according to this, everybody's out buying houses, buying real estate. Now, you may apply for a mortgage, but are you going to be approved? New lending restrictions now coming. We're seeing banks now wanting 20% down, 700 plus FICOs. How many people who bought a house just a year ago could even apply and get a loan today with a lot of the new lending restrictions? But at the end of the day, when half of this country isn't working, and when you have half of this country making less than $32,000 a year, who really are the buyers of all these houses? Who really is applying for these mortgages? There's a contradiction here with what's going on here. And when I look at some of the news over the last couple days, like this one, Comcar Industries declares bankruptcy. A lot of you folks have been sending me this article on Comcar. 4 out of the 5 companies that they own are trucking companies. The 5th company they own is a truck repair company. Founded in 1953, they had more than 2,000 employees. What are these people going to do for a job now in this economy? Are these people going to be buying new houses? Are they going to be applying for a mortgage? Here's another article today. As RV dealerships decline. This is, again, another bellwether. And I did a video back in 2019 talking about the depression that the RV industry was in going back into 2019. And now we're dealing with a collapse. Before the economy completely collapsed, the majority of dealers said that RV sales were down 50%. 44% of dealers said that their new unit sales volume was down 75% or more. 21% reported their new RV sales were down 50 to 74%, and 11% had closed their sales department. So what's the outcome going to be in the RV industry with this economic collapse now hitting America? And as we're being told, people are buying houses, even though we saw housing starts clobbered, housing permits clobbered. Article yesterday, LA Times, Pier 1, done. They are closing the rest of their remaining stores. They opened, I believe, in 1962, 1963, somewhere in the early 60s. At one point, they had 1,100 stores doing nearly $2 billion in revenue. Now, their history, they will be closing 550 of the remaining stores. Thousands of people will not have a job. Will these people be applying for a new mortgage? Many of these people are going to be in big trouble. If you work in retail, what are you going to lateral over to? Another retail job? Retail is going through an apocalypse. It's been going through an apocalypse for a couple years. what this means to me, 540 stores, just imagine the amount of people who are not going to have a job. So again, as we've said in earlier videos, many people are not even going to be returning to a job because it's not going to exist. Many more will return, but the companies that they work for are on borrowed time, and they are going to be unemployed casualties. Somebody is dumping everything. Mystery investor pukes $333 million in real estate ETF. This is on Zero Hedge. Very interesting article. If you get a chance, check that out. In the article, it says one mystery investor blew out more than 10.5 million shares of an S&P 500 real estate fund last week, representing a $333 million sale. This amounts to 7.4% of outstanding shares in the real estate select sector SPDR fund, a macro indicator of the industry's largest companies. It says here in the article, a very large institution is expecting widespread weakness across the real estate market. So obviously some institution knows what's coming, but we're being told that housing's coming back, retail's coming back, auto sales are coming back. Everything is going to be coming back. Somebody's going to flip the switch. The jobs are coming back. The airlines are all coming back. Everything's going to be fine. Look, if you believe that, more power to you. God bless you, and the best of luck to you. But I've got a bridge to sell you if you believe that. Wall Street Journal today, millions of Americans skip credit card and car payments. Wall Street Journal today. About 15 million credit card accounts and 3 million auto loans didn't get paid in April. You know, think about that. This whole collapse started in March, and by April, millions of people couldn't make car payments, millions of people couldn't make credit card payments. Does that not tell you how unprepared people are for a rainy day? Does that not tell you that the consumer was not strong? Because if the consumer was strong, he would have a rainy day fund. He would have a cash reserve. He'd be able to go a month and be okay, be able to make the car payment, be able to make a mortgage payment, be able to make the credit card payment. But the consumer here in America, the average American, cannot go a month without pay, or they're in big, big trouble. In fact, most people cannot go 1 day or 1 week without pay, or they're in enormous trouble. 3 million auto loans are now in hardship programs. Last year, in 2019, I did a couple videos just talking about the 7 million people who were severely delinquent, 90 days plus, with their auto loans. These 3 million people are not being added to that 7 million because they're in a hardship program, so they don't count as defaulting or late. So in all reality now, we have over 10 million people from 2019 to right now in 2020 who are late on auto payments, who are severely late. So we're not really hearing the real truth of just how bad things are. Just like they're telling you 36.5 million people are unemployed right now, when it's around 55 million. They're not telling you about the people who haven't gotten through the unemployment phone lines, the unemployment websites, the people who haven't even filed yet, the people who have rolled off, who've stopped looking, who don't count, the people who can't find a job, who just don't count, people who don't qualify for unemployment, they don't count. So multiple millions of people are not being added into these unemployment rolls. So the real number is probably right around 55 million people. Here's an article on Bloomberg today. Small Alabama city says it's broke, files for bankruptcy. And we know that many states right here in the U.S. are quite literally bankrupt. Take a look at the state of Illinois. Take a look at the city of Chicago. We now have Fairfield, Alabama, filed for Chapter 9 bankruptcy protection yesterday. Local budgets across the nation are being decimated. Again, California, Illinois, many other states, many other cities. And what do you think they're going to do? They're going to want a handout from the federal government. What else do you think is going to happen? There's two things I can promise you, and it's this. Jobs are going to decrease while taxes increase, and this is a really dangerous combination. We are going to watch taxes go up while people lose more jobs, get paid less money, and this is going to suffocate the average Joe. This is going to put a lot of pressure, a lot of stress on the average Joe, the average American. They cannot do it. People are tapped out. But as we know from history, when cities go broke and states go broke, what do? Well, just look at Chicago, highest property taxes in the country. They raise the state tax, they raise the property taxes, they try to squeeze all the blood out of a turnip. That's what's going to happen in these towns and in these states. So get prepared for it. I want to share one more article with you today. It's on wolfstreet.com and it's titled, What Unicorn Money? And I want to go over this article. And you know, when I see the Dow Jones up almost 400 points today, wow, 55 million people go jobless, while people are in food lines, while industry across the board is being decimated, while I sit here during a frozen economy, yet the Dow Jones is up almost 400 points. We continue to watch the hocus pocus, the magic tricks. It is an illusion. Let me paraphrase. During the good times, nearly 40% of the listed U.S. companies had lost money in the prior 12 months. Wayfair, Zillow, Redfin, Uber, Lyft, WeWork, Carvana, Tesla, Airbnb, Casper Sleep, Zoom, all these companies losing billions of dollars. If you're a small business owner, how much money could you lose before you just close down? But in the illusion, these companies get rewarded. These companies have been losing money for years. A successful company today is one that burns cash, and the more cash it burns, the better it is. It's almost genius what they're doing. The genius lies of bamboozling the public and corporate investors into enthusiastically and unquestionably going along with this and making them believe that this is some sort of new religion, that this is how business is done. It's just an illusion. Prior to this, if your company didn't make money, you went out of business. Investors didn't pour money into losing companies. This works for a while, but then reality hits home. And the crisis is beginning to show. So I thought that was interesting because literally every day when you watch these markets, it's an illusion. And it's just more good money chasing after bad money. The Ponzi scheme is going to end, and it's going to end very, very ugly, and millions of people are going to get absolutely wiped out. And millions of people right now, most Americans aren't even in the stock market. Most Americans right now are depending on a stimulus check. They're depending on unemployment. They're depending on the Fed to continue to pump and print tons of money, put money blips on a screen to keep this whole thing going. The problem is, as you continue to do that, you pay a price, and you pay it with purchasing power. What happens when that money no longer buys anything or it buys a lot less? What happens when a loaf of bread is $20, $30? What happens? See, people just believe that we can just print ourselves out of debt. And all this printing has gotten us where we are today. And we're not going to fix the problem that we're in today by printing more money. So, scary times, real scary times out there, and people just ignore the warning signs. Now, millions and millions and millions of people become more and more dependent on the government to give them money. They become debt slaves. So I'm going to wrap it up right here today. Look, if you believe in the system, if you believe that the U.S. consumer is strong, if you believe that the U.S. economy is strong, if you believe that this economy is going to come roaring back with the flip of a switch, if you believe in the U.S. dollar, if you believe in the financial institutions, the U.S. banks, if you believe in these markets, if you really truly believe these markets are free, that they're not being controlled, that they're not an illusion, more power to you. Great. Keep investing in them. Keep protecting yourself with paper. If you don't believe in these entities, if you don't believe all this baloney, then you better be protecting yourself with more than paper.